Today we're going to talk about how to maximise your tax-free earnings in the UK for the 2024 to 2025 tax year with 4 months left to go. You can make more than this, but if you hate the taxman as much as I do and want to avoid self-assessment tax return, this might give you a few ideas. Everyone's circumstances are different, but for the purposes of this video, we're going to run this based on the average UK salary of £37,430. So jumping into the core of tax-free earnings, it's the personal allowance. Most of you will know what the personal allowance is. This is the amount of income that you can make with paying no tax at all. Currently this sits at £12,570 under normal circumstances. If you earn over £100,000, this will be tapered down by £1 for every £2 you earn over the limit, up to £125,140. This can be reduced by putting money into a pension, but we'll talk about that in a different video. There are a few things though, even if you are in the lower tax brackets, that can impact on your personal allowance. One of these is the blind person's allowance. So if you are blind or severely impaired and have a note to prove it, you can get an extra £3,000 tax-free added to your personal allowance. A good thing to note here is that if you do have a blind spouse or civil partner, you can transfer that allowance to yourself for an extra £3,000. Another factor that comes into the personal allowance is marriage allowance. So let's say you are the breadwinner and you are looking after your significant other. They can transfer £1,260 of their personal allowance to you. Next up, we have the personal savings allowance, where you can gain another £1,000 tax-free earnings from things like normal savings accounts, bonds, accounts that have a notice period, things like that. This does taper off at the upper income brackets, so a higher rate payer will only get £500 of this allowance, and at an additional rate you would not be receiving any. For some examples of what's currently available, Barclays currently offer a rainy day saver account at 5% interest rate on the first £5,000. This means that if you had that maxed out alone, that's £250 per year. If you can find 4 accounts like that, you've reached your limit. To look at the different things on offer, we are typically sat around the 4.8 to 5% mark in the current state of things. Instant access accounts being a bit lower than notice accounts. ISAs we don't really need to care about as they are inherently tax-free anyway. And then bonds 4.8 around there. We also have Moneybox just as another example, with their best one coming in from the 95-day notice account at 4.8%, which is variable, so this can change during the course of having your money in the account. Next up, we have dividend allowance, which has been completely slashed over the last few years, down from £2,000 to £500, but it's still better than nothing and a good way to get some extra tax-free income. This we could max out as the current amount is £500, so you could do this from having £10,000 invested into dividends, which are paying out a 5% yield, and you would reach that number pretty quickly. We can then get an extra £1,000 from a trading allowance. This can come from self-employment, babysitting, gardening, as the government website recommends here, hiring out anything that you have, or I would recommend if you have a hobby that you're making things or crafting, you can then sell those and try and make a bit of money on the side, and you won't need to tell the government as long as that amount sits as less than £1,000 per year. Moving on to the big one, it's the rent-a-room scheme. With this, you can make an extra £7,500 per year tax-free from renting out your house. Now, it's worth noting that this still has to be your primary residence, and technically you are also meant to be there when you are renting it out. It is not like you go on holiday and someone else then rents the whole property. You are meant to be there. It is meant to be renting a room, as it says. Also worth noting that if you jointly own the house, your limit from this will be halved as it is split between the two of you. Also on this, it's probably worth making sure that you're doing short-term rentals. This way you don't need to go down the whole route of a tenancy agreement, in which case if you're doing that, you're probably going to make sure that you're earning more than this amount anyway and filling in a tax return. So for this, I would recommend things like Airbnb, Monday to Friday rents and things like that, just so that you don't need to go with the extra complexity of fully becoming a landlord. This does open you up though to other risks, so do your own research and come to your own conclusions as to whether this is for you. But potentially if you're looking at buying an apartment or a house, if you're looking at a 1-bed, maybe stretch that to a 2, or if you're looking at a 2-bed, maybe stretch that to a 3, or if you're in a house with an ensuite, definitely look at this, because That extra room, you might need to pay more for it on the property, but if you can make £7,500 out of that tax-free per year, that's more than going to pay for the extra mortgage that you have on it, and ultimately will increase your net worth faster. Another aspect of the rent-a-room is that you need to factor in whether you'll need to notify if you're a single person, whether the council will then make you pay a higher rate of council tax, which will then eat into that extra income. Another one, which is huge, is capital gains tax. So if you have let out the entire house, or if you've taken more than one tenant or lodger at a time, you might then need to pay capital gains on your primary residence, which would definitely not be worth it. So again, if this might be for you, go do some extra research. An extra £7,500 on the line could definitely be worth it. The rent-a-room scheme is not to be confused with the property allowance, which is an additional £1,000 of income that you can get from property tax-free per year. There is a caveat that although you can get both of these allowances, so the £7,500 and the £1,000, these cannot be for the same property. So try and use your £7,500 for your main residence, and then potentially pick up a small piece of land that could be used for allotments, or if you're feeling entrepreneurial, or renting it out for livestock, or my preference, if I was to go down this route, potentially buying a small garage for somewhere in the region of £10,000 to £35,000, depending on where you are in the country, and renting that out for £1,000 a year to hit that number, and it would quickly pay back on the equity that you've got there. Putting this all together, when we look at it for someone on the average income in the UK, we could earn £24,000 of that tax-free. But most people know that you're already using that personal allowance. So let's look at the rest, which you might not currently be taking advantage of. Between the rent-a-room, property trading, savings allowance and dividends, you could be adding an extra £11,500 of tax-free earnings to yourself per year. What does that look like in practice? So here's a model of if we earned £37,430, the national average, our take home, if we were having student loans and a 2% pension deduction, we would take home £29,000. So adding 11,500 to that, if we were able to max out all of these sources, would result in a 40% increase in the money that we take home. And this would be without picking up a second job or anything like that. The rent-a-room does have some risk to it and would have a higher level of impact, but you're also going to get a lot more out of that. So do you think it's worth it? Are you going to take advantage of this? Let me know down below what you're going to do.